CRRC was formed by the merger of the two biggest train makers in China, CNR and CSR. The two announced the merger plan at the end of last year and received approval in April this year. The stock regulator suspended the trading of the two companies' stocks in May while transferring CNR's shares into CSR. One analyst says the boom of the new stock on its start of trading was not a surprise.
One of the major starting points of the merger was to find a way to reduce destructive competition. We know that CNR and CSR used to squeeze each other's prices. I think people will think well of the new company. Another thing to note is that during the suspension of trading, the A-share market rose continuously, and that heavyweight shares like the banks, non-ferrous metals, and coal were all very active. So I think CRRC will continue to rise to catch up with the overall market.
However, there are concerns that CRRC's very size might affect its international competitiveness, and the company might be considered by foreign markets to be a monopoly. The new company is now one of the world's biggest industrial companies, second only to General Electric's. Just at the end of May, Thailand struck its first high-speed railway deal with Japan rather than with China, though China and Thailand continue to discuss other rail deals. Many took that as a bad sign for China's new massive company, but Chen says the market shouldn't feel nervous over a single lost deal.
Although Thailand gave one of its deals to Japan, there are other chances for Chinese railway companies to work with the country. I think it's just a small part of the whole picture and a matter of sequence. And I'm sure the government had already taken those concerns into account when it began pushing for the merger.
Some of CRRC's international competitors include Bombardier of Canada, Alstom of France, and Siemens of Germany. 米嘉怡 ICS4 CCTV, Shanghai.